Joining me now is Tony Zapparo, CEO of EquitySet. Tony, welcome to NYSE Live.
Thank you for having me. Great to be here.
So what market developments are you tracking most closely as trading gets underway?
I think the biggest thing currently is, of course, government shutdown, and a lot on the macro side. It's seen if and when the markets themselves, right, the NASDAQ, the S&P, how they're going to be tracking with a lot of macro headwinds that are coming up. And so shutdown is key on the table to see if that's even close to end or if that's going to go another 30 plus days. But a lot of it is just seeing how kind of some of the euphoria, right? You mentioned a little bit of a breather yesterday. Some of the tech trade was taking a dip. If that continues to kind of rebalance and people position and trade out of that. And again, how data comes through on what is likely a softer macroeconomic take and what impact that has on the markets.
All right, and Tony, well, the latest data shows that over 70% of traders expect the Fed to cut rates in their December meeting. We understand you feel the Fed should actually be raising rates. Can you take us through this?
And I think what I expect is obviously in the minority, or what I would think is good for the economy. There's what the Fed or the government or the economy should do, and then what it will do. And I think we missed the boat, right? When we started the easing, with the first kind of half point and then quarter point cut following that. And I think the whole reason is we're failing to show from a fiscal responsibility any kind of restraint. And what's happening is, even though the headline inflation numbers are coming down, right, still above 3%, a lot of the household inflation, right, what people are actually feeling, that's much higher, right? 1.5, 2 times that with insurance rates and shelter and food. So I think there's a little bit of kind of distrust in what the numbers are versus what the reality is. And that's why I think a lot of what the Fed should have done is at least stand strong and not cut, just because as an economy, as a market, we've kind of become addicted to this looser policy that, hey, we don't need to feel pain. We can just print more money. We can spend more money and things will go up forever. And so that's where, even though it would cause bigger slowdown, I think we need to get prices under control, even in the face of a little bit softer economy.
And, we are on day 36 of the government shutdown, and it's prevented the release of several hard data figures. We did recently receive CPI data, however. What do you make of the state of inflation, and what impact do you think it'll have on the Fed's decision moving forward?
Yeah, I think what's been released has only helped to support the case for easing. And kind of like you said, there was 70% of traders are expecting a cut in December. I think it was interesting that we heard a little bit of hawkishness, or let's call it less dovish, kind of pivot when Powell mentioned it was far from it, that it was a given that it was a cut. And so I think the issue is the market is taking the headline CPI number and running with it, right? Which means we could have further potential easing because it's okay. And because it's softer than 4, 5, 6%. But that's where I think the real danger is as soon as the consumer or the reality catches up, right, and spending potentially dips because the consumer's under a lot of pressure because the inflation that they're feeling is a lot more than 3%, I think that's going to play out very negatively in the market, cause a snapback. And so maybe we ease, maybe we correct a little bit now, but I think those are the big disconnects we're seeing is at some point something's going to break. And I don't think inflation is just going to magically come down, right, 1, 2% to kind of average out what's been a very strong uptrend in the prices of goods that a lot of people can't afford.
And we are in the heart of earnings season. What are some of your biggest takeaways so far in the last minute we have together?
Yeah, there's a lot of euphoria. And again, earnings, there's a lot of comparisons back to .com and how this is different because there's earnings. Absolutely, there's better earnings, there's better profitability. But I think the tail risk, again, is it concentrates in so few companies. And so you've got concentration risk in an index. And a lot of it is, it doesn't necessarily matter. We had earnings back then, but the big thing is the multiples and the growth is actually a lot slower, right, in kind of the final years. Earnings growth has been half as much as during 1999, right, in those top constituents. And so I think that's where it's just having a little reality set in, having a little fiscal discipline, having a little bit of investment discipline, not chasing the names. Otherwise, again, the repercussions of what that could mean are a lot more severe than correcting and just having a little bit more discipline going forward.
All right, great insights from Tony Zapparo, CEO of EquitySet. Thank you so much for joining us.
Thank you for having me.